the second part of the series of our market maker cycle BTMM. It will be best for you to first watch the first video of the series, as it will be extremely beneficial to you because it's going to be a continuation of where we stopped on our last video. So just a quick recap. On the last video, we talked about market maker manipulation, how they do it. In the manipulation in the video, we'll talk about the area you should look out for this manipulation, which will make what it made reference to that beginning of the day, the beginning of the week, the beginning of the month, or the beginning of the year. So these are the areas whereby you should look out for the accumulation or the manipulation of the market maker cycle. This manipulation was actually illustrated on the charts for you to see how it happens. Today, I will teach you one of the most powerful and important parts of this strategy. If you master this one, I guarantee you that your trading accuracy will increase dramatically. Today, I'm going to be talking about levels. As in knowing these levels now, this will enable you to see where the markets will go in short term as well as long term. As a matter of fact, if you understand the levels you are, it will give you an edge to know where the market will go in a short term or in a long time. This particular series, this is the major problem everyone has. Everyone using this strategy has, because they don't understand their level. The level counting as it is, let me call it 90% of the strategy. Because if you don't know the level you are, you can't know the kind of trading setup you should look at for. Because each level has their own trading patterns, has their own setups for it. So if you don't know the level you are, how do you anticipate for the setup you should look at? So today I'm going to be talking about the levels. So before we go deeper, I will illustrate the market maker cycle. I will also define a new term called reset. So what is the market maker cycle? The market maker cycle is the pattern that it presents on the charts again and again, as in it presents this pattern often and often. Literally, the market maker cycle is a template where it accumulates, set the lowest price, then after it has set the lowest price, then it issued a long sustainable rise to the highest price of the day or week or month, depending on the time frame you are. The magic number in the market is 3, meaning that after it has set the low of the day, week or month, it throws 3 pushes toward the highest price. In the sense that once it set the low of the day, it throws 3 pushes towards to give you the high of the day or high of the week or high of the month, depending on the time frame you are. These pushes are what we call levels, and being able to count this properly will give you an edge to predict the next market move. The good news is I'm going to show you how to count this level, and by the end of this video, you should be able to do it yourself. So the market maker cycle looks like this. I will give you a pictorial view of how the market maker cycle looks at, and at the same time I'm going to show you on the charts. So this is a pictorial view of how the market maker cycle looks like. Here we have the accumulation here, as in it sets the high and the low within a region, as in this upper region here and this lower region here. You have the lowest price for this region. From there, it make an accumulation, rise down, like 3 pushes up to give you the high of that range, which we call the accumulation. Then it gave you a stop point, right? We call this a stop point. What the stop point is saying that it gave you a first move prior to the initial intended move. In the sense that they give you a first signal. You understand? No, by the time you see this, or we believe is in we're in a what? There is a breakout of this range to what? To trap the breakout traders. You understand? Those who use breakout, break and retest, understand all those retest strategy, retail principle, retail concepts. So by the time they set the high, they set the low, trade pushes up, come back to what? To retest it. Then they what? They rise. They try another pushes up to what? To grab the orders here, right? And by the time they do that, they give out what? A breakout trading. And then they give us this big formation low, which we call the low of the day. This low can actually be the low of the day, low of the week, low of the month, or even low of the year, depending on the time frame you are, or depending on the time frame it forms. So after they gave us this, after this low of the day, giving us this peak formation low, giving us this W to what? To confirm our what? Our peak formation low. It throws a pushes up, as in it throws a pushes up. The first pushes that we call level, then make a consolidation, give a consolidation, then throws the what? A second pushes, and then the what? The final pushes which is what? The third pushes, before giving us this peak formation high for that day, setting the high of this day. And after it has set the high of the day with the three pushes, it consolidates back. This consolidation is it consolidates back towards, as in they just have to release the order they have. Like they reset the system, they reset their what? Their order book. You understand? By releasing some of the contract they've had to what? Just to accumulate more, and then they continue. This is what we call the reset. By the time they throw this words, they come down in consolidation to form another peak formation, and then they will rise or fall depending on the what? On the cycle we are talking about, whether the market maker uptrend cycle or the market maker downtrend cycle. So the structure I showed earlier is the template of everything that we'll be talking about in this chart later in this video. So what is a reset? A reset is a restart of the cycle after three levels has been issued. What do I mean by this? After the market maker accumulates, because every market maker cycle will always start with accumulation. After they accumulate, they will give you the stop loss, a first move, and then they will set the low of the day, giving you the peak formation low. But after they've set the peak formation low, just like we said here, after they've what? After they've set the peak formation low, they will give you three pushes. This is the first pushes, the second push is the third pushes. Then after they give this three pushes, they will reverse. They will give the peak formation high or peak formation low, which can be the high of the day or the week or the month, depending on the time frame you are. After this peak formation has been set, the high of that region has been set, they will reverse back to give you what? A consolidation. So this is the consolidation they are giving what? To reset. This is what we call reset. Understand? After they throw it three pushes, and by that a complete market maker cycle will contain three pushes or three levels depending on the time frame you are. Let me show you what I mean by this. So this is a complete market maker cycle, as in we've combined a lot of I combined it. You understand? I combined this template with a lot of time frames. You understand? But for the purpose of this video, I will be taking this to be the what? The daily cycle. You understand? The daily cycle as a daily time frame. So they started, just like I said earlier, every market maker cycle will always start with accumulation. As in they need to what? Grab the order, swing up, swing down. They need to grab the order, swing up, swing down, and then what? They will give you a first move to give you the big formation. You understand? This is the first move, like a breakout to trap the breakout traders. After they trap the breakout traders, they will give you a big formation low or high. In this sense, they give us a big formation low, giving us our W. Then after they set the low of this, since we are talking about the daily time frame, this is the low of the day, of the first day. You understand? They gave us this low, then they give us these pushes that we call level. Since we are what? On daily time frame now, we'll call this level. You understand? But on 15-minute time frame, we'll call it pushes. So they give us the first level of rise, the second level of rise, the third level of rise, and they give us this peak formation high, this peak, which is the highest point for this day, for this first day. And then after they give us information, they will reverse back to what? To the graph or to reshuffle. They just need to what? Reshuffle. You understand? Their order book. So this reversing back here to give another peak formation is what we call reset. You understand? A reset will always happen after a complete three market maker cycle. You understand? To continue the cycle. So in this day, this is the day one of rise, the first day of rise. They give a reset on the second day, giving us the low of this day, and then they give us the first push. The first push is for the first level, the second level of rise, the third level of rise. They give us the high, the peak formation high, as in the high of this day two. Yeah, and they they reverse back to accumulate and what give us the reset to continue the market maker cycle, to continue the day three of rise. You understand? They gave this reset. We have our level one, level two, level three, and what we have the peak formation as in the high of this day three here before they will reverse and give us this accumulation here. So let's see a practical example on the chart. So I'll be using okay, a practical example of it. So so on this example now, I'll be using a three pushes, a daily cycle, as in 15-minute time frame, to show you a three pushes, intraday three pushes. You understand, within a day. So looking at this now, you have your what? Look at this is our accumulation. This is our accumulation. This is our accumulation. Right? Look at the swing up, swing down, and what? Finally, what? Give us this breakout and what? They give us this is the first push. Hmm? This is the first push. This is our first push. Okay. Then we have our second push, right? And we have our what? We have our third pushes. Then they gave us this what? They gave us this reset, this formation low. Hmm? They gave us this formation low, the accumulation, and then we have our what? We have our first. I'm going to be marking it with a rectangle. We have our what? Our first pushes for the day, and it's what? It's consolidation. Hmm? Then we have the what? The second pushes right from here. We have the second pushes right from here, and it's consolidation. Look at this is the consolidation. Then we have the what? The final what? The third pushes right here in this day. You understand? After a three pushes on the 15-minute time frame or three levels here, reversal is imminent. As in, once they make these three pushes, reversal is they need to reward they reverse the market and make a what? Reverse the market to what? To continue. So they have what? Like I said earlier, this was what the accumulation here. They give the first move here. We have our peak formation low. They gave us these first pushes here. The second pushes and its consolidation. Look at this already. The consolidation for the second pushes and the what? The final pushes here. And then we'll have this. And look at what we have. Look at what we have. The what? The reset back and then what? Continue here. Understand? The reset back and continue here. Let me show another example of it. Like I see something like that on my okay. So another practical example of it is this. Look at it here. Let me clean this. So you can look at our this is our what? This is our consolidation, right? This is our consolidation. The what? They gave the first move and this. Then they gave us this what? This peak formation, right? And we have our what? Our first push, right? For the day. Its consolidation, its accumulation, and what? Mm, right? And we have our what? Our last push. However, our last push, right? Let's say the first pushes, and what will happen? Look at, as in they reverse the market back as a reset and what and continue. So this is how what to make. So let's move on. Let's continue with so sorry. So before we move further, let me make a clear definition, a clarification for you on our levels. So like I said earlier, that a level is a pushes. I will clarify something for you. A level is a pushes. On 1 hour time frame, a level is defined as a day of rise with three small M15 pushes in it. I repeat, on when we are on our 1 hour time frame, a level is defined as a day of rise with three small M15 pushes in it. While on our 4 hours time frame, a level is defined as a week of rise with three small H1 levels in it. Then if we are on our daily time frame, a level is defined as a month of rise with three small H4 levels in it. Let me show you what I mean on the chart. So for the purpose of this, I will still be using this from 1000 like this. Let me clean all these things that will have a watch. So what I'm about to show you now on the chart now is a practical view of how I analyze or look at the market. You understand? It's a practical view of how I analyze or look at the market. Right. So if you want to do this, always start with your what with higher time frame. So for the purpose of this, I will be starting on my what on my daily time frame. Right. Okay, I think doing this. So merely looking at this daily time frame now, I can say we are on what we are on the level 3, right? Look at this was the last recent trend I will have. This was our what our first this average our first level of rise woods, right? We have this as our what our first level of rise. Okay, let me just start from this recent one here. This is our what this is our level 3, right? Our pre-formation low. I can call this okay, this is our accumulation. This is our accumulation, right? This is our accumulation. Then we have the second leg is starting from here. This is our W. This is our W. So this was our first. This is our first rise, right? Our first level. And we have a what? It's what is our is reset, right? The market pull back, giving us our what? Our second level to this point here. And we have this what? We have this as our pullback as it pull back before finally giving us this last level of price here, right? Before finally giving us this last level of price. So let me demarcate it with a rectangle. So we can ascertain that we are on what we are on the level 3 of rise on our daily time frame on boom 1000. So this is how I look at the chart, right? So what I'm going to do is that this last level here now, this last level, which is our what this last level here, which is our what our third day of rise, I'm going to mark it, right? Right. This was where it starts from, right? Then this is our what our third level, right? On our daily time. Now go down to my now looking at this, I told you on the last thing that when I was making a clarification on the levels, that a level is a complete 1 month of rise, as in a complete day of rise on each one on daily time frame will give us a level. Look at this demarcation from this and this period separator. This is for a whole month, you understand? Right? This is 1 month, a whole month of rise, right? Making it out a valid one for us. This that I was saying this was our first week. Look at our first level, a whole month of rise. accumulate consolidation up to this. Then this second level was, look at it here, as in a whole month of rice, consolidation, right here. Then we have this what. So I will mark this last level, which is our level 3 on our daily. Then I will go down to my 4 hours time frame. So on 4 hours time frame, I expect to see 3 weeks of rise to make that level a valid one for me, right? So okay, this is the level I mark. Okay, so on our H4 now, this is what, this is our first week. So our first level now is starting from this. I'm going to be marking it here, right? Let me use another color for this, probably gold, right? So our first week of rise on our 4 hours time frame is starting from here. You might be wondering that this is also a rise, but we will look at this is just a consolidation. So the first week of our first level on our H4 overlapped to the second week, which was here, right? Which was here. Then what we have the second what? We have the second week of drop down from here, right? Down to these two, down to this to look at the consolidation, right? Like 2 weeks. You understand? On 4 hours time frame, from one left period separator to this left period separator is our weekly interval. As in from here to here is our weekly range. From here to here is our weekly range. From here to here is our weekly range. So we have our second level, right? Then we have this, our what? Our third level, right? Another week of what? We have this another week of rise, right? So this gave us what? The consolidation was here. This level 2 now ended here, right? Ended here. While the consolidation for this started from here, right? So this is, so we can say we have a complete cycle on it. Let's go down to our daily time frame. You can see. So don't forget, like I said, that on our daily time frame, we will have 4 levels of H4. 4 levels, as in on daily time frame. A level on daily time frame is going to be 3 small levels of H4 time frame, and this is exactly what we just demonstrated on the chart. You understand? This is example of what we just demonstrated on the chart. So now by the time I'm done with this, right, I will watch. So so what I'm going to do is that now this last level here, let me verify it. So I will what, on this last level now, by the time we go down to our 1 hour time frame, we will mark it on our what, on our 4 hours time frame. So by the time we go down to our what, our 1 hour time frame, we expect to see 3 levels in this level, as in this first week of rise on our H4 should give us 3 levels on our 1 hour time frame. Let's verify it and see. Actually, it's going to give us 3 levels, but for clarity of it, let's go down to our 1 hour time frame. So you can see, okay, oh, it actually started from here, right? So whoever our first will be called first is going to, so on daily on H1 now is going to be a day of rise, right? It's going to be a day of rise, right? Is what is going to give us the what we expect to see 3 days of rise, right? As in 3 days of rise on our daily time frame. So the first level is going to be this, right? So I'm going to use another color for this. Probably let me say I'm going to use yellow, right? So let me use yellow for this. So this is our first day of rise, and our second day is consolidation. Second day was this. So the whole of this was is still our second day, right? It's still our second day of rise, right? all this was is just accumulation, as in the consolidation for our second day of rise, right, up to this region here. I was expecting someone like I will have stopped here. No, I wouldn't have stopped here, right? Because look at it's still the consolidation of it. It finishes here. It finishes here, right? It finishes at the day of this. I mean, this was the close of it. It finishes here, right? Then we have the what? The last day of rise, which was this, right? Someone might say, right, this is it. And this was our last day of rise. Let me see. So for this one now too, we'll mark the same thing. We'll mark the same thing. So for the purpose, I don't want the video to be too long. I will just skip it and move down to the last level here. Let me move down to the last level here. Right? This is our third level. Our level 3. So this is our what? This is our first day of rise. And I started from here. Hmm? Right? And its consolidation. Then we have the what? The second day of rise. Starting from here. This one actually ended here. Mm, Up to this region here. This was the consolidation. This was the consolidation. So this is where the predictive formula comes in place now. You can see this is our 4 hours time frame. We have 3 levels on it on our H1 time frame. Yes, and we have 3 levels on it on our daily time frame. So this is where the predictive formula comes in place. Now I will go down if I this last level here now on our H1. Let me delete all these ones. Okay. Right. So this so I'll go to my 15-minute time frame. The predicting formula now comes from this perspective here. So I will go down to my so this is our the last level for our H1, you understand, which is also our H4. So on this last level here, I expect to see 3 15 minutes pushes on this, as in 3 15 minutes pushes should be on this level here. So this is where by the time for this level to be valid, as in to be a complete level here, 1 hour time frame, we expect to see 3 15 minutes pushes in it, just like we verify from this other one. This is our H4. So we expect to see 3 days of rise of H1 on our H4 level to make the level a complete cycle, and we've demonstrated that out and we've had this. So on this now, this is our last level. So for us to know if this level is really verified or is complete, as in the cycle is complete, we expect to see 3 15 minutes pushes on this last level on H1. So we'll move down to our 15-minute time frame. Okay, and we'll start here. This is our peak formation. Look at this is the consolidation. This is our peak formation. So the first pushes was this. The first pushes was this. Right? So let me use another color for this. So by the time we mark out, I have not used blue. Let me use blue for this. This was our first pushes. And we have the consolidation is starting from there. Normally you should just end it from this consolidation, right? It's consolidation here. And the second pushes, and it's what? It's consolidation. And we have our third pushes, and it's consolidation. So seeing this now, we know that this last level on our H1 is complete already because we'll have 3 15 minutes pushes in it. So after 3 pushes, 3 levels, the reversal is eminent. As a reversal is the ones you can verify like this and see that okay, on all time frame you've gotten your levels complete and you move down to your what, your 15-minute time frames. You verify to you have your what, your 15-minute, 3 15 minute pushes. The level is complete. After it, expect a reversal, which we call what, a reversal is eminent after 3 complete cycles. And look at what we did. Look at what it did for us. Understand? They gave us this information, yes, and there was, this is our accumulation, and they gave us this I. Then we have the first 15 minutes pushes, right? Second 15 minutes pushes, and we have the third 15-minute pushes, like that. You understand? And that is how you verify. So let me move down to my H1. You understand? Because now on my daily time frame now, you will see that we've even started another levels, right? So this is how I verified it. So looking at this now, we know this uptrend, as in this market maker day 3 of rise. You understand? The level 3 on the daily time frame is complete. So we just what, we move down to, so we already know it is complete. So the next thing we'll be looking for is okay, which direction are we going into now? Since the market maker uptrend is complete, definitely we are what, we are expecting a reset to either continue the uptrend as a demand from higher time frame, or we should expect the market maker downtrend. You understand? So already, since we verified this and we've gotten this, we know that, let me clear this chart so we can see what's selected. I'm still left with this. Okay, so we verified that okay, this cycle already, as in this third level of the rise on day 3 is complete, and reversal is what, eminent, and we've seen the reversal already. So we've already seen this reversal here. So what we'll do is that we'll mark out this reversal that we have here, since we're expecting a reversal. Understand? They'll move down to our 4 hours time frame and what, do the same thing that we'll do here. So on our 4 hours time frame, remember that a complete level here is what, is the week of rise. So this is telling you already that this is our peak formation. You can see our M here. You can see our M already after they give us, you can see our M here already. And then on the 4 hours time frame, as a week of rise is going to be a level of 4 hours time frame, automatically this is telling you that this is our first level, on the first level of drop on what, on the H1 on the 4 hours time frame, and this is going to be our what, our second level of drop, right? So what we're expecting V1 to do is what, we're expecting it to what, to give us a peak formation high here, so that we can have the what. So if you look at this now, you will know that this level is not complete. As in, they've not completed this 4 hours level. You understand? So we are expecting, let me use rectangle so that you can get what I'm saying. You understand what I'm saying? That this was what, wow. So this is our 4 hours, right? This uptrend, market maker rise is complete, as in we verified it, it is intact. Now we're expecting a market maker fall, drop. So, and I told you a level on 4 hours time is going to be a whole week of rise, which we did from here. Let me use another color, which is going to be, can verify this is all. They already give us this our M, like I showed earlier. We have our M already, which is our what, our peak formation high, right? Our peak formation high. Then we'll have the, this is the first week, first level. Then we'll have the what, its consolidation, the level 2. The consolidation lasted to this area here, right? It lasted to this area here, and then we'll have our level 2 starting from here, and its consolidation. So we can still say we are still in what, in level 2 for this reset to look for this H1 level, H4 level to be complete, we expect to see another what? Another, we expect to see a what? Another, we expect to see another drop, another week of what? Another week of drop on B1 for us to say that this H1 level is what? Is complete. Understand? So we can just what? Go down, right? We expect to see another drop. So what we should do is just that, okay, this level 2 now, right? We can just go down to this and what? We look at the 15-minute time frame and see what was happening there. Let me drop the what? Arrow here, horizontal line, so we know where we're starting from. Let's go down to 1 hour time frame. Then from 1 hour time frame, we watch. Okay, you can see. So now 1 hour time frame, look at, we have this eye already here. Look at, this is our first day of rise, second day of rise, and we have our what? Our third day of rise. So we knew this was complete already. Understand? This was complete already. So we have this day of rise, this cycle, this mechanical downtrend cycle is complete here. We expect a reversal, of which we did have a what? A reversal already. Let me use another color since it's getting confusing. So we already verified this. So we expect a what? After 3 levels of rise or drop, reversal is imminent, and of which they did what? They did reverse. They did reverse. Give us this reverse. We can see our WE here giving us our what? Our peak formation low. Then we expect another what? Another 3 levels of, we expect another 3 levels of rise, of which we did have it here, right? Did have it here, and this was it. We did have it here, right? So we can categorically say that, okay, now on our 1 hour time frame now, for this cycle to be complete, we need to see 3 more levels of it, just like we did have what? A complete cycle. So we are still expecting B1 on our 1 hour time frame to still go up to give us the what? We can call this less, as you can see it's still forming already, but we have this. So what we do is that, to anticipate for this, you just go down to your what? Your 15-minute time frame and verify if this first level is complete. As in, you are expected to see 3 levels what? You are expected to see 3 pushes, right? You are expected to see 3 pushes, 3 15 minutes pushes to make this level here complete. So let's go down to our 15-minute time frame. Okay. So you can see this was our consolidation, right? This was our consolidation, and this was our what? Our first pushes and its consolidation. Our second pushes and its consolidation. And we did what? Have our what? Our third pushes and its consolidation, right? So seeing this, we know we are what? We are in our level 3. We expect a what? A reversal, right? Reversal is imminent after 3 complete level. So this is where the predicting formula comes in play. So for you to do now, what you just do here is just that you look at this reversal and see if it is complete. Though now nowhere from our 1 hour time frame, this was our first level, our level 1. We are still in level 2. We expect this to go more. So there's all possibility. This is our what? We are still expecting another what? Another rise on it, because this should be, since this is done, they're taking out this high already. So this is going to be our first pushes, right? And we expect this is going to be our first pushes. Our second pushes can be this. So we still expect to see another what? I still expecting another We are still waiting for another what? Another pushes on the 15-minute time frame to complete this level 2 on our what? On our H1 level to what? To give us a complete cycle of it. So we can see stable 1,000, like you can see, is still in an uptrend on our 1 hour time frame, because we are still waiting for what? Our third pushes to complete our level 2. Then we will have a what? A small pullback, which is our reset. Then we will have what? Issue us our what? Our last level, which is our third level of rise on it. So this is where the predictive formula comes in. You mark out, you start with the higher time frame. Most especially, you start from your daily time frame. You move down to your 4 hours time frame. You move down to your 4 hours time frame, right? You mark out the level, verify if it is complete. You come down to your 1 hour time frame, verify the level is complete, and finally you come down to your 15-minute time frame. You also verify the pushes there to know if that level you've marked is actually complete. And by doing that, you know where you are going to in the long time and in the short time. What you understand? You know where you are going to in the short time and the long time. Let's continue our. So to conclude this, if you cannot count levels properly, it means you cannot predict where the market will move next. Because once you start with your what? Because the moment you start with your daily time frame, you understand? Because the moment you start from a daily time frame, you come down to your 4 hours time frame. You start with your daily time frame, you mark the levels there, you know where you are. The daily time frame will give the long time bias. You move down to your 4 hours time frame, you still mark the levels, you verify if the levels is complete based on what you mark on your daily time frame. Your 4 hours time frame will also still give you the long time bias of it, just that it can't be long as the daily time frame. Then from the daily time frame, the levels you mark, you come down to your 1 hour time frame and resegmented it again, reconfirm the levels on it. The 1 hour time frame downward will give you the short time trend of the direction. That is where the predictive formula comes in place. Because by the time you mark your level, you can predict where you are going to in the next one. Just like we did on 1,000, now we can tell, as we said, from 1,000, we are still expecting another pushes to give us the third pushes to complete level 2 on our 1 hour time frame. And then we'll have a pullback, which is a reset, and then they will finally give us the third levels of rise, and then we can move down to it. So on our next lecture, we will be talking on the setup you will need to look for in line with the market maker method, because like I said earlier, each levels have the setup in it. So by the time you know the levels you will know what you are anticipating for. You understand? Then you know the kind of setup you are looking for. If you have not joined our Telegram channel where I share free trading signals and advice, you will find a description of what the link in our description. Click on it and join it. Like when I was even preparing for this video, there was a signal I dropped on it, which was V1 volatility 100. He has given us the three levels of what? Three levels of rise. So we knew we've completed it. We knew we were anticipating for a sell. By the time you join, you will see the signal there. I said it that on my next video, you will see it. You understand? So thank you very much. I appreciate you. Do watch this video over and over again. Then try and mark out levels and verify these things. Try and see it yourself. The more you mark, the more you tend to understand these things. And this is the major concept of this strategy, because once you can successfully identify your level, you can predict the market 99%, if not 100%, and you will be right, because you already know where you are in the long time and the short times. Until the next video, stay tuned. So to the next video, I'll be talking about the setup you should look for, how you should trade them, where you can find it, how they will present, and how you can trade it. Until then, remember to hit the subscribe button hit the subscribe button, like it, comment on this video, and share. Whatever difficulty you encounter in the process, you can always drop your comments in the comment sections, or you chat me up on my WhatsApp directly, as I'll be dropping my WhatsApp link in the description too, as well as my Telegram link. Until then, thank you.